Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Monday, the 11th of December, 2023. I'm laughing because I was doing the wrong updates at the beginning. My mind is on the CPI for tomorrow. That's what I think you all have to look at. They're expecting that the headline number's unchanged, but that the core did climb 0.3. Now, it'd be ideal to see it less than the 0.3. Doesn't have to be a negative number, but anything that beats that, the market's going to say, oh, they got inflation on the run, blah, 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 blah. Okay. Then on Wednesday morning, we get the FOMC, but it's not morning. That's going to happen at 1 o'clock in the afternoon with the 1:30 p.m. press conference. And then in the mornings on Thursday, we get a bunch of central banks. The Bank of England, I kept saying it was Friday. It's not. It's Thursday. They're right along with, on Thursday, the European Central Bank, the Swiss National Bank, and the Norges Bank. That's N-O-R-G-E-S, Norges Bank. So that's going to really set things up, and that's it. Now, I think all the banks are going to have the same message. None of them are going to raise rates. That's my guess. All will say they've got their hand on the pulse. If the inflation starts ticking up, they're prepared to go higher. But right now, they want to see the lag effect, and if inflation keeps falling. Europe's very different than the United States. They have seen the markets tumbling away. China's very different. They're in deflation, if you really look at what's going on. Not inflation, deflation. That is aggressively happening there. So we have different markets in different places. So the question is, which one of them stays higher for longer first? Then the second question is, who cuts first? Because then the market might shift gears and say, yes, they're cutting. And in theory, you'd say, well, I don't get as much money if I put it there, but they're going to spur their economy on quicker. So you're caught in this quagmire. Is it better to stay higher for longer to keep your currency strong, or be the first one out of the box to cut and say, I'm going to improve my country's economy. You want to buy our currency. That is the argument you're going to run into. They can phrase it any way they want. I've given you the nitty-gritty on it, and that's where this is going to sit. When we look at the S&P, the market is again up 0.5 percentage point on the first day, and you could see you're now through those old highs, but it's not the close yet of a week. So again, this is the beginning of a week. We got to get to Friday to see where that's going to finish. What happened here is we had been sideways in these markets, and I think you can see this pretty much right through here. This is good, yeah. Now what you did is you started picking up today. So now you're trying to come out of that sideways action into tomorrow's CPI. If you can and you run with it, okay, do we get ahead of ourselves here? What's going to happen? Because if you run, how far do you want to run into the FOMC meeting on Wednesday morning? This is a dangerous time right here, but you know how bullish I am. I still think wherever you are now, you're going to be higher at the end of this year, right? Right, going into that Santa Claus rally time, which is not now. We've got time. He hasn't left the North Pole yet. When we take a look at how you're working here on the swing line, no trend. You have a lower low, higher high. You came down a couple of days ago, challenged the 18-day average again. That's all that it owed on the downside. It hit what it owed, and it snapped right back. But it has resistance right here at the upper band. And no, you'll never get me tell a client to buy over the upper band because it's going to keep going. It does that without me, the way that I teach charting. Now, is the market going to re-embed? It lost its re-embedded reading. Now, let me walk you through here so you can see what I'm going to say. All right, here we come. Any reading under 80, 79 to be honest with you, and I'll come back another day. Here's 64. You had a couple of days where you started falling apart. You had the numbers over 80. Then you had 3 days in a row where you lost the reading. Watch. Now the market starts coming back up, and this was on Friday. Both numbers were not over 80. Today, both got over 80. You can't embed that fast. You got to wait to see if it's going to re-embed. You have an overbought market, and that's what I wanted to show you. That's in a key resistance area. You have the same thing in the NASDAQ. And no, folks, I am a bull in these markets still. But I wait for my setups to come in. And no, I am the guy, probably the most chicken trader you'll ever run into. I don't want my clients to go into the CPI report. Reports have a way with the chart action based on everything, and everybody says they know, and they come out with the surprise, and you're the one that gets surprised because the market can do anything. It comes out right on the number, and the market takes on a different spin on things all of a sudden. I like that to get settled in, and that's how I approach it. This is the most bullish of all of the indices. I've said it over and over. My subscribers know I repeat it to them every morning. I go, if you're going to be bullish, this is the one you want to be in because it's kept the embedded reading all the way through, and here you go for your new highs in that. The one that the question is the rotation going to happen now? And traders are betting on that you will get your embedded reading here and that the money will flow out of others. Now, you are getting something bullish about to happen. The 18-day average is right now flirting with getting over the 100. You see that? And then the 200's right here. You can get a whole inversion here. Up and away you go at that point in terms of theory being that when you get the short-term average over the medium, medium over the long, what happens is you got a bullish setup, and when it first happens, traders recognize it and they start buying. I got to be involved in that. So things to watch. Will you embed as well? 10-year note, you lost the embedded reading. When did you lose this? Friday. So if you lost it, I'm looking for the market to hit the 18-day average of closes. Okay, we'll see. I'm pretty darn close. You did it right here. You lost it right on the money, and you did it right. By the way, the 5 and the 10 both did it. In the dollar index, so the trend is up. You are overbought. You're coming into the 100-day average that recently has been the resistance. Do I know if it's going to hold up in the CPI? I don't have the slightest idea. And then you have the FOMC meeting. Now remember, the Fed chair speaks when we get to all this, and they're talking the currencies at 1 in the afternoon. What time is that in Japan? Better take a look because people are still sleeping. They wake up, they react. What time is it in Europe when we're at 1 here? 7 at night. People are out to dinner. They're with their families. They're not stuck watching these markets and trading big. So it goes to Japan. They'll react. The reaction then comes back to Europe, and then we look at us. However, the difference this time is they're going to look at themselves in relation to us because you got both the European Central Bank and the Bank of England making their moves. I believe the Bank of England typically goes around Chicago time. I'm guessing noonish. I forgot to be exact. But I know Miss Lagarde speaks early in the morning because that is when I'm on my treadmill in my office and I'm looking at her and I'm watching what's going on. I do have a treadmill here, and that's exactly what I'm doing. So I watch this very carefully to see what's going to happen there. Right now, you're down to where the support is. In the British pound, the trend is down, the bias is down, and you're right on my line of the sand, and you've been there for 4 days. As traders brace themselves, what is this report going to do? In Bitcoin, I had told traders, and I've told you how many times last week, I said I kept telling traders, you want to be coming out of a lot of your position there. You can hold on to the base that I had informally told people in the morning subscriber video. Informal means I said I'm not going to follow it on my updates, but I'm telling you, it's where it is. I think you're going to go to $42,000 to $45,000. That's what I said in the videos. And up here, I said, I think we're close enough. You got to take a chunk of it off. And now you need to get closer where we start hearing things from the SEC. You fell pretty darn hard today. Let me just show you. You were down 8.63%. So you got a whole correction in one move, and you stepped out of the trend. You're not in a downtrend. You're just no longer in an uptrend. You still have the market under the 18-day average of closes on the difference of the February Brent to WTI. To me, all that means is that when you're under it, they narrow in even more, okay? They're not widening out where Brent is much stronger. In terms of a market, I don't see a trend. You had a collapse in price, you got a feeble bounce, and you're trying to embed. You haven't set up what to do yet. The same identical thing as I see it in WTI oil, heating oil. We're going to be 47 degrees on Saturday in Chicago. Today's the coldest in the 30s, not freezing, in the 30s, higher 30s. Same tomorrow, and then we start warming up again. This is the strangest early December I can recall. And they're even talking about it all over the news. They go, you know, the only time we're seeing somewhat normal temperatures is at night when it should. That's when the temperatures drop. What I feel terrible for, and I'm so tuned in on this, is we still have a lot of migrants that are sitting right in front of police stations in tents that aren't heated, and these poor people are freezing. I mean, this whole thing is so wrong. It's terrible. When I see people, I give them a few bucks, and what do? In the natural gas, lower highs, lower lows, the market running down to this, still embedded. I'm still bearish. Why is this down? It's going to hurt you the first time the news says cold spell, lasting cold spell for 10 days. Kaboom. Haven't heard it yet, but that's what you got to be careful of and be smart and stay away from that. But my job is to guide you through that. And each morning, I start you off at about 5 to 5:15 in the morning, I start recording. Now, my charts are going to look the way you're seeing these charts. They're going to be jet black. I want to capture, see if I can get one to stop. But they're black, and all my studies are these colors on them. And the reason is it jumps at you on the chart. I teach. Notice there's more lines on these charts than you are. You will pick up on them 1, 2, 3 in the morning video. You're going to see another moving average, a couple of different ones that I use different than you see right here. We'll talk more about outside days. We're going to be talking about the enhanced Bollinger Band a lot because it happens so darn often. How do you take advantage of it? Where to go with it? And you are going to hear, and I make you a promise that I tell you there's nothing for you to do. Keep your hands in your pockets and we wait. So it's a new video every weekday morning, Monday through Friday. On the weekend, you get the weekly video. In the weekly, we cover everything. It's longer term trades from the weekly chart, swing trades. You put it all together for a game plan. I will talk to you fundamentals, dollar risks in it, what I'm seeing, what I'm learning myself. I'm always learning something, and you always see the market altering what it's doing, and I bring that up. And a lot of seasonal talk there. What are the seasonal studies? You never trade off the seasonals, but you understand where they're at. And those that have worked 90 to 100% of the time, and there's plenty of them, over a 15-year period, I look at in the futures markets. That's not a guarantee it'll work the 16th year, but it's worked so much that we want to incorporate it. When they don't work, it's a big move the other way. You always pay attention to that. All right, IraEpstein.com. Under the word research, it's right there. I'll tell you the cost, $7.95 for 30 days. You're not committed in any way to anything long-term. In the member login area, you go in and you can modify your subscription. We get people that buy the subscription and cancel it. They don't want it to renew at the end of the 30 days. Terrific, it won't. We get people that go in, they'll buy the 30-day, 2 weeks in. They go in and they go, I want this for a year. We give you the credit for the remaining time, and they move on to the year. We don't go the backwards way. We don't take it from the year down to that and give you back money, and here's why. I'm giving you each day at a good discount than when you're buying a year up front. So I'll be with you fair. You decide what you want to do. IraEpstein.com, under the word research, the price of, if you think about it, a large special coffee at Starbucks, and you're getting all these videos, come on. See you tomorrow. Take care.